When we say crypto native, we're talking more about decentralized exchanges, really, because that's ultimately the future. And that's really what the blockchain and crypto native industry is all about. But we're not there yet. There needs to be a lot more developments and improvements on the user experience and on the user awareness before we reach that point. But that doesn't dismiss or negate the fact that we believe there's going to be a convergence, much like ETFs in their current form or the evolution of many previous different instruments in the past. We believe there's going to be a convergence between ETFs and tokens, generally speaking. But as Michael has already highlighted, there are certainly caveats to investing via ETFs. And if we were to sum it down, heightened security and just the ease of mind and the ability that you're able to mix this with any other money market funds, any of your stocks, whatever it may be. It's all living under the same roof, and you really don't have to be jumping from one platform to the other. Whereas with some of the things like crypto native infrastructure, you're still dealing with a lot of smart contracts, which opens you to the risk of technological risks. Sometimes you don't really know who the market makers are, which is a severe counterparty risk that hasn't been resolved yet. But we are in the process of seeing new solutions come to address this. The fees is a serious point that should not be overlooked, because at the end of the day, there's a TER for any kind of a product that you buy via ETFs. Whereas when you're buying via decentralized exchanges, it really depends on the network that you're using. The fees for buying assets on exchanges on Ethereum are going to be significantly different from ones that you are buying on networks like Solana. And of course, that's not the most satisfying user experience. But again, that's the beauty of interacting with a new technology and living through the different evolutionary stages that the industry will go through before we reach that stage. And I think we can jump on to the next slide, Lena. Okay, so we were just talking about this. Both products are not cannibalizing each other's market share. That's really not the case. So why do we say that, Lena, from your perspective? Why do you think they can coexist and they can complement each other, their portfolio?
Absolutely. No, it's because one serves as a true store of value, a true decentralized store of value, and has a completely different set of properties than Ethereum. Has a clear vision, digital gold. And I think there is no easier way of defining that. Ethereum has a completely different vision, and it has positioned itself from the start as a global app store. So it's not digital gold, but it could be called digital oil as it fuels the apps built on it. So yeah, it wears many hats. It doesn't have one clear vision, but it has a set of visions that combines them all. And that's the beauty of Ethereum. The reason why they can coexist with each other is why you, in a portfolio, why you own gold and why you own, for example, Apple or Google. They both complement each other, as you said. They're not very correlated right now. There is some sort of decoupling that's happening. And there are so many innovations that Bitcoin is actually catching up on with Ethereum. And as we've mentioned in our earlier analyst calls, and one key innovation that we are still going to see how it's going to evolve, but it's already transforming the traditional finance is tokenization. And that's something we're really betting on in 2025.